tax exemption, tax rebate or tax deduction, tax saving. The list is endless. And so is the confusion when it comes to understanding how income tax laws and rules impact your finances. Without a doubt, the world of income tax is intimidating and scary. But you don't have to worry. In this video, we will tell all aspects of taxation that go into arriving at how much income tax you need to pay this year. But before we begin, a gentle reminder. If you want to watch more videos like these, do subscribe to ET Money channel and hit the bell icon too. Let's begin with a few basics. Income tax is the most popular form of tax which is levied on an individual's income. The term individual applies to not just a person, but also includes Hindu undivided family, company, cooperative societies and trusts. In this video, we will focus on personal income tax, as that is what impacts most of us. The government levies taxes on your taxable income. Taxable income is defined as the income of an individual, minus any allowable tax deductions. In simpler words, it is the amount of one's income which is subject to income tax. As much as this taxable income may seem simple, to get to it is a process laced with calculations and adjustments made with various tax deductions, tax exemptions, and tax rebate. So now let's look at how you get to this taxable income. Step 1. Calculate your gross income. Start by writing down the annual gross salary that you get. This will include all the components of your salary, including HRA, LTA, special allowances, etc. Next, take out the exemptions provided on the salary components. The major exemptions you get are HRA, that is house rent allowance, and LTA, that is leave travel allowance. For HRA, remember you can claim HRA only if you live in a rented house. If you have your own accommodation or live with your parents, then HRA is fully taxable. Also, the tax exemptions under HRA is taken as the lowest of the following amounts: actual HRA received, 50% of basic plus DA for persons living in the metro, and 40% in case person living in non-metro cities. Actual rent paid less 10% of basic plus DA. After removing these exemptions available to you, remove the standard deduction of 50,000 rupees given to all by the government. Now you will arrive at your net salary. Next, you need to add income you might have received from other sources. This could be rental income, interest earned from deposits, capital gains you might have received, etc. Step 2. Remove deductions to arrive at your taxable income. The government encourages taxpayers with incentives to reduce their tax liability by providing avenues where they could reduce their taxable income. Next, you deduct investments or expenses eligible under Section 80. The biggest section in this is Section 80C, wherein you can claim 1.5 lakh rupees deduction under various heads. Investments in PPF, ELSS mutual funds, EPF, Sukanya Samriddhi Yojana, premium paid for term insurances are some of the most popular ways to claim this deduction. Also, if you have a home loan, the principal amount paid back in the year can be claimed as a deduction in this section. For taxpayers who are investing in the NPS, there is an additional 50,000 rupees deduction they can avail under Section 80 CCD 1B, which is over and above 1.5 lakh rupees limit under Section 80C. Next, you can claim deductions under Section 80D of the Income Tax Act on the premium paid towards medical insurance, unlike the umbrella of 1.5 lakh rupees limit under Section 80C, which can be availed by all taxpayers. Section 80D limit depends on the age of the insured and the age of family members included in the insurance cover. If you'd like to know more about deductions under Section 80C and Section 80D, do check out videos on these topics on our channel. Now, given our penchant to hoard money in bank accounts, the tax authorities have introduced Section 80 TTA to provide a deduction of 10,000 rupees on interest income from a savings account with a bank. Next, if you have an education loan, you can claim deduction on interest component paid. Apart from this, if you have a home loan, the interest portion of the EMI paid for the financial year can be claimed as a deduction up to a maximum of 2 lakh rupees under Section 24. This is over and above the deduction on principal portion under Section 80C. Step 3. You will arrive at the net taxable income. By subtracting all the eligible deductions from the gross taxable income, you will arrive at your total income on which income tax will be levied based on the income tax slab you fall under. At this juncture, you should know the applicable income tax rates and tax slabs We will now get into the crucial step of calculating your tax. Step 4. Calculate your taxes. After arriving at your net taxable income, you are required to calculate and pay taxes as per the slab and rates applicable. For the first 2.5 lakh rupees of your taxable income, you pay zero tax. For the next 2.5 lakh rupees, you pay 5%, that is 12,500 rupees. For the next 5 lakh rupees, you pay 20%, that is 1 lakh rupees. For your taxable income part which exceeds 10 lakh rupees, you pay 30% on the entire amount. Step 5. Consolidating your net tax. In case your total income after deductions doesn't exceed 5 lakh rupees, you can claim rebate under Section 87A of 12,500 rupees. One more thing. If your total income is between 50 lakh and 1 crore rupees, then you need to pay a surcharge of 10%. And if your income is between 1 crore and 2 crore rupees, then you have to pay 20% surcharge. Let's now understand this with an example. Akash works at an MNC in Mumbai and his annual gross salary is 15 lakh rupees. After deducting all exemptions available to him, including HRA and standard deductions, his net salary is 12.5 lakh rupees. Last year, he earned 10,000 rupees as interest income from his bank account, and his investment in ELSS mutual funds and contribution to EPF combined come to 1.5 lakh rupees. He has even started investing in NPS for his retirement and has a health insurance policy for himself and his wife, for which he pays 15,000 premium every month. As you can see, calculating income tax liability is very simple if you know how to calculate income tax. We have explained different income situations to calculate income tax for you to get an idea on how to go about calculating the income tax that you need to pay. If you still think calculating it is too complicated, there is help at hand. In the description below, you have a link to the income tax calculator that we have built for you to quickly figure out your tax liability. Also, as you can see, tax deductions can help you save a lot of tax, and there are some great avenues to help you not only achieve this, but also help reduce stress around finances. So go ahead and download the ET Money app by clicking on the link below and get a personalized tax saving plan. You can also get those products in just a few taps.